Ooh, retail might be starting to capitulate. Oh, that is actually really freaking good news. Final freaking lead. Jeez, man, I have been waiting for those sissy paper handers to paper hand for a long freaking time now. Now, I don't think you and I should paper hand, okay? It's not financial advice either, but between us, okay? Usually, when retail en masse starts capitulating, it forms the bottom of the market. It's great. Retail's really good at buying the top and selling the bottom, okay? They're really, really great at it en masse, okay? Now, we know we don't want to be like that, okay? So, let's take a look at some of this information from this JP Morgan report that just came out. I have the JP Morgan report. It is pretty thorough. It's pretty good. We're going to keep it nice and simple, but wow, it is awesome. We're going to talk a lot about this. Let's get right into it. Remember, if you are an accredited investor, check out househack.com by going to househack.com and submitting your invest ready letter, and join before October 31st to get up to 50%, well, if you're a course member, up to 60%, in basically free call options on the company, which is awesome. Read all the details. This is not a solicitation. Just go to househack.com, read the PPM. You could read the details. Obviously, you have to invest, so they're not really free, and warrants aren't really call options, but you get all the details. Just I'm simplifying, okay? Anyway, let's get into this. So what do we have here? We have a retail order and balance. So first, according to JPM, okay, and all these companies have sort of their own access to data. According to JPM, retail traders were sellers for the second week in a row. This is actually like the first time that anybody has said retail has been a seller. So far, like since December, since this dippity doodla da has been dipping, everybody's been like, buy dip, buy dip, buy dip. This is it, buy the dip, buy the dip. And it's just like, like mental. It's just constant. All you gotta do is buy the dip. And I'm just like, no, okay, no, that's not the only thing you can do. You can sell. You can wait for your 30-day tax loss harvesting period to go by, and then you can, slowly start nibbling into things that are more likely to survive in a recession, although tentatively that hasn't been working out too well for Tesla, but just wait. Topic for a different video. Anyway, this past week they sold net $1.1 billion, almost 2 standard deviations below the 12-month average. Okay, so basically what that means is if the 12-month average of retail buying is this, we are 1 sigma below, no, 2 sigma below, like usual selling by retail. And see, I purposely said sigma because we remember when Vlad during the whole Robinhood crisis was like, this is a 5 sigma event. Sigma is a reference to how many standard deviations you're away. 1 is like 7%. 2 brings you to 95%. So basically we're like at the far tail. Visually we're at like over here in terms of retail selling. Okay, it's kind of crazy. Anyway, so they sold a lot, and they also sold both the Monday and Tuesday rallies that we had, which actually, that's not so terribly dumb. I mean, it's kind of like, hey, we got a little bit of a rally here. Let's take some tendies. Okay, I mean, I can't blame that. They do remain buyers of ETFs, though, including buying the S&P 500 and selling the Russell 2000, which is small cap. So they're kind of moving into S&P 500. Now, we got some specific tickers and stuff, and we'll talk about those in just a moment. Oh, well, they actually mentioned some of them here. We'll go even deeper on this in just a moment. But retail traders sold $2.4 billion of individual stocks. And then if they sold $2.4 billion of individual and then they net sold 1.1, that means the difference went into ETFs, right? Anyway, large cap names including Apple, Facebook, and Google were sold off. All of those suffered from heavy selling in the last 2 years and represented the worst selling in single stocks since March of 2020. Man, I was making videos in March of 2020. It's literally sitting next to my fireplace. I sat next to my fireplace. And I'm like, guys, I don't have any cash here, done. I took out cash and I'm like, guys, I really feel like I'm taking money and I'm just throwing it into the fireplace. That's what it felt like in March of 2020. It was just so terrible. It was so bad. It kind of feels that way now. Every time you buy, it's just like, poof, and it's gone. Yeah, I don't know why I'm laughing. It sucks. Oh gosh. Jack tells me, my 7-year-old, he tells me I laugh at him too much. Not like at him, but like sort of with him. Like he'll tell me something at school. And I'll be like, Jack, what'd you do at school today? Because he goes to a religious school. So I'm like, Jack, what'd you do at school today? And he's like, God. Just like, no, you did not do God. Oh, dear. Anyway, bearish sentiment was also evident in the options market as retail traders traded risk for volatility. Okay, yeah, that's going bearish. They supply, okay, yeah, those are sort of the numbers on that. That's fine. Okay, interesting. So now let's look at some charts of order imbalance. So take a look at the ETF sort of selling pressure here. You can see basically El Charto going down-o. It is still positive, but the amount that it's positive by is less than it has been. Taking Charto here. Boop, 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 boop. Oh, get out of there, little circle. Boop, 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 boop. Since about the middle of 2020 for ETFs. Yeah, crazy. Now, when we look over here at, we'll put that circle right back there. Okay, now when we look over here and we look at this circle, we're actually the worst single stock selling, actually, as they said, since 2020. Yikes! That's wild. And you can see the downtrend here. Look at the downtrend in these lows over here. Lower low, lower low, lower low. I mean, retail's just like, I'm peacing. I'm dipping, boys. It's over. It's over. It was a good run. We have fun together, but we're done. Oh, man. It's the best time to buy. Yeah. All right. So let's get to a few charts here that I thought were interesting. Short interest in the top 100 names. Top 100 names. This isn't like the small ones, okay? Although it's the top 100 small and mid caps over here. But still, the top 100 of those, right? Look at that. Real big imbalance here in terms of short selling overall, whether it's institutions or retail. Pretty stable here on the large caps. And then here's some particular signals or, imbalance read. It looks like inflows to the S&P 500, either through ticker SPY and ticker VOO, were positively imbalanced, so more inflows than outflows, right? Tesla had larger inflows, probably because the damn thing's crashing to, I mean, it's basically going to go to like $69 a share. Okay, I don't actually believe that. And Amazon's doing well. The ones that are actually sucking are Apple. That's actually kind of surprising. Some outflows on the SQQQ. Meta, Google, AMD, Triple QQQ, Occidental Petroleum, I'm surprised by that, and Nike, Nvidia, Microsoft, seeing some outflows over here. Now, I do want to say something about Nike. Okay, this morning, a very, very smart course member. I mean, it was great. This is the kind of stuff we do in the course member live streams in the morning. So this morning, we were supposed to do an Etsy deep dive, and we didn't get to do too much of an Etsy deep dive. We kind of did like a scratch of a dive for Etsy, and then we've got some more charts to look at here in a moment as well. But we did like a scratch of a deep dive in Etsy, and when one of the course members is like, oh, hey, Kevin, what about Lulu? Like, do we think that Lululemon has the potential of surviving an earnings recession? And I have to say, I was really, really impressed. I'm not going to go through all of the details right now, but I'm impressed. I'm not impressed with the fact that their share count like doubled over the last year, but that has a lot of different reasons for it, and that's kind of boring for this video. But what's crazy is they actually are like not reducing prices the way Nike is. That's why when I saw Nike, I thought about this. Like Nike's like, we have too much inventory, more inventory came in when people stopped buying. We believe in our story. Let us tell you about how great our story is. But yeah, we're discounting more. Lulu, on the other hand, is like, oh, no, we ain't discounting anything. We still selling everything for full pop. Get you $1 hollers. Really incredible. I have to say, that was really, really impressive. So not necessarily something I want to go dive into. Got to study the share dilution that happened. Their shares doubled over the last, like their shares outstanding doubled over the last year. But anyway, aside from that, whew, very, very big difference there. And I know Tesla's not performing the best right now, but really, I mean, do we actually think they're going to have negative EPS compared to any other quarter going forward here? No, absolutely not. And they just got their S&P upgrade for investment grade debt, which is actually quite bullish. But anyway, let's keep going over here. So this was interesting. This is what JP Morgan uses to sort of get data on retail. And I have to say, I thought it was quite an insult that only about 1%, that little green line right at the top, little green line, that only about 1% of retail activity was actually Webull. which, remember folks, you can get literally 12 free stocks with Webull by going to metkevin.com/Webull, but there's only 1% Webull. Robinhood, where you can also sign up with, okay, you can go to metkevin.com/Robinhood. Robinhood represented just 2% of retail activity per JP Morgan here in just the last, few months. That goes to June over there. The one who's really killing it, apparently, with retail is TD. Well, damn. I don't have an affiliate link for them, so Anyway, margin balances. I like looking at this because I like to see margin go down. So margin account balance change. Change is good. So, yeah, but the chart's actually a little difficult to read, and it looks like it really only goes to about June. So I don't know how useful that chart is to us. Screw that chart. All right, forget it. Next, we'll go over to this. This here gives you a little bit of a visual in terms of some stocks that I'm watching. And the more they are to the right, the more retail interest they have. This is now per VandaTrack, okay? And this is for the last few days rather than the last couple weeks. Because remember, JP Morgan told us we actually had some outflows for Nike over the last few weeks. Well, VandaTrack over the last 2 days is actually seeing more bullishness come back over into Netflix, Nike, and Tesla. These names over here getting a little bit more retail attraction. That is while their prices are going down. So you're seeing some buy the dip activity there. I have to say, Shopify's financials were not very good when we did that in a course member live stream. Remember, you can still get lifetime access. We're actually having issues with Shopify right now and trying to launch a particular product that won't have lifetime access. But anyway, if you want lifetime access to the live streams, join using the link down below and the coupon code. And I'll let you know when I finally get this fixed. Retail, super not interested apparently in eBay over here, MST, DraftKings, Uber, less interest in Hut. You're getting a little bit more institutional buying over here. So quite fascinating, as well as Posh, not getting a lot of retail interest over there as well. But anyway, this gives you a little bit of a look here. Now, VandaTrack is also noticing that we're seeing this sort of increase of retail accumulating positions in Occidental. Now remember, JP Morgan showed an order imbalance over the last 2 weeks. That's okay. This chart is just showing you a more like over the last 2 years kind of look into retail's interest in Occidental Petroleum. This is probably some coattail riding of Warren Buffett going on here. And something that is odd is that VandaTrack, and this just shows you like we have to be a little bit careful, but I'll give some bottom lines here about the data that we look at, because VandaTrack actually thought that retail had net inflows into the market over the last over the Monday and Tuesday period. Not by much though, somewhere between 900 to 1.1 billion, and we've had higher days of inflows, but. Then again, probably right there, at least according to the VandaTrack averages. So the way I kind of reconcile that is I look at, all right, nobody actually knows, because the definition of retail could be very, very different based on every company that's looking at it. And so what I like to do is I like to do the following when you get sort of mixed messages. And I'm purposefully talking about this here at the end because I think it's logical to look at it this way, okay? So let's say you have one data set and it says, okay, retail is slowing, which is VandaTrack, right? Retail slowing, which is true. Well, I did a report last week and we were seeing that retail investments overall were starting to average lower. We're getting more, instead of like an average inflow of $1.4 billion, we're getting closer to like $1 to $900 million of inflows. So that average is going down, right? So retail's slowing. So I guess if I were to draw the line for retail, it probably looks a little bit more like this, right? So this is probably your VandaTrack report right here. And then let's do our JPM report. JPM is kind of implying that the trajectory looks a little bit more like that, right? So the point though is that both of them, even though they have a little bit confusing data here in the last couple weeks, JP Morgan thinks things are a lot more dire than VandaTrack thinks things are, you are still seeing what is an inflection point down in VandaTrack's retail tracking data and an inflection down in JP Morgan's data. And the point is, when we see retail starting to sell is usually when we form that favorite word called a bottom. Now, obviously, we've got 2 big things coming up. I'm going to do a separate video on those. We got a jobs report coming up tomorrow morning. That's going to be at 5:30 a.m. Pacific time, which is 8:30 a.m. Eastern. Make sure you come to that. In case you don't have a convenient link for that, just go to metkevin.com/links. metkevin.com/links. You could do it on your phone right now, whatever, and just click the top link. I put it there for you to make it really, really easy. So metkevin.com/links, and you could just basically RSVP to the jobs live stream tomorrow, October 7th. And if you do that, metkevin.com/links, and then click the little jobs live stream, and then click the video, you'll get, you know, a reminder to notify you that, hey, we're going live tomorrow morning. Hopefully you're there. Or you could watch it whenever you wake up or whatever. That jobs live stream is tomorrow, and then next week, actually, today's the 6th, next week, Thursday, we'll have the pleasure of doing the CPI report. Now, both of these are going to be mission critical to the Federal Reserve, and it's possible that we're seeing some of this retail selling right before these 2 reports because retail thinks maybe these reports are just going to be bad. And retail will be right here. If those reports are bad, we screwed, baby. We screwed. It's gonna suck. You're gonna wish you so. Cheers, folks. I mean, happy coffee drinking, folks. Day drinking is bad. Have a good one. Goodbye.